Conversation this beautiful Thursday, the 14th day of May. There is a 2026. My name is Alan Hubbard, and sign language interpreter this morning is Gideon Maina. Now, today the conversation might sound a little bit serious, but we're going to try as much as possible to make it sound as simple as possible. We are going to be talking about matters of the budget 2026, 2027. The conversations have already started and the proposals are already out. The government looking to collect more revenue, the people in somewhat, yes, they want to be taxed, but also they are asking themselves, how are they going to be taxing themselves? How are they going to be taxed? And that tax is for what exactly? And to be able to understand this conversation, we have two gentlemen in studio, and I was told to read the entire title of their names. Gentleman one is a CPA, Martin W., and the second gentleman is a CPA, Robert M. I don't know if the initials are deliberate or our poster decided to to use the initials, but both gentlemen are from ISPAC. To start on my immediate right, kindly introduce yourself and tell us a little bit about what you do.
Thank you, Herbert, and
Yes.
thank you for this opportunity, and also for ISPAC to fund us to make the presentation.
Yes,
My name is Martin Waweru.
yes. Hence the W.
Yes, and I'm a practicing accountant.
Yeah.
And that is why the title CPA, Certified Public Accountant.
All right.
Yes.
We generally sometimes don't understand this.
Yes, Certified Public Accountant.
Yeah.
I'm a member of Public Finance Committee of ISPAC.
Yeah.
And I'm a full-time practitioner under Nitram Accountants Africa. We are a licensed accountancy firm offering audit, tax, and business advisory. And so the reason we are here to make our voice out
Yes.
and contribute to the proposal that is before us.
Yeah.
Looking forward that maybe the voice may be heard on those some of the pressing issues, and they may be vacated.
Yeah.
And we look forward to a more continuing growing economy. Yes.
All right.
Pleasure to be here.
Thank you very much, Mr. Waweru, for being here. Yes.
Yes, so thank you very much once again, Herbert, for having us here.
Yeah.
So my name is I'm Robert Maina.
Yes.
Currently, a member of Institute of Certified Public Accountants and, in the Committee of Public Finance and Tax Matters. So, my background is I'm an accountant and an economist at the
Yeah.
same time. On a full-time basis, I work for an accounting firm called Ernst & Young, EY, and deal with matters to do with tax. Pleasure to be here.
Yeah. Thank you very much, gentlemen, for making time. This conversation is very colossal, and I do not know where to start. But let us start in retrospect and looking at the 2024-2025 finance bill. What are some of the things? Basically, let us start it here. What is a finance bill? Let us start with the basics. What is a finance bill? Because the viewers who are watching us, some of the viewers who are watching us are from a very niche demographic, and they might not understand what a finance bill really is. So let us start our conversation from there.
Well, a bill is a finance bill is a proposal
Yes.
on the ways and means through which the government looks forward to collect revenue
Yes.
from different contributors in the economy, whether from the very known employment
Yeah.
to the business. And the business has various categories of tax. So the bill gives continuous proposals
Yeah.
looking to the future vis-a-vis the different activities the government needs to undertake,
Yeah.
which are recurring and other recurring expenditure and others development. So how do they finance this is through taxes.
Yeah.
So government, quote unquote, doesn't know how to do business. It's financed through collection of taxes.
Collection of taxes.
And so the bills.
Yeah.
Every year, so they look forward to what they need to do. But somehow they also look back, what did we do? Where were the gaps? How do we finance those gaps? What did we look progressively to increase? What do we vacate? What do we... So a bill is that proposal that looks forward to correct revenue from the different contributors.
Yeah.
Yes.
I like how you said, quote unquote, government does not do business. I don't mind that you have something to add, but as you're adding on to that, when does the bill become law?
Okay.
And which are some of these, recurring expenditure? Recurring expenditure sounds like jargon. So give us a feel of what are these recurring expenditures that are in government.
Fantastic. Thank you very much. So in terms of the budgetary process, looking at the budgetary process in Kenya, it starts very early in the year. So back in October of every year, they start the process of asking for views from the general public to give views on what they think should be included in the following year's fiscal year considerations. Come April, by the 30th of April, is when the finance bill has to be released. It's a mandated date by the Constitution. Now, between now and the 30th of June, a lot of activities will go on. So now the government has already requested people to submit their views on what they have already proposed. So on the 1st of July, it becomes effective. A few of some of the proposals might become effective next year, January, but most of them will become effective 1st of July this year. So we have more or less 1.5 months before this becomes effective. And then coming on your question on the recurrent expenditures, there are two basically types of expenditure. Development. Development is, and when you go to the electorate or the people out there, they will say they want the roads, they want the hospitals, they want the schools.
Education.
That's what typically we call a development. They are developing those infrastructures and all that. The current is what do we pay for the salaries that we pay for parliamentarians, civil servants, all these travel and accommodation things. So anything that you'd say on an annual basis, those things have to be paid. You have the pension and all those things that have to be paid there. So that's what we call the current, and that's why they consume a huge percentage of our budget, because you cannot fail to pay salaries in the worst case scenario. You cannot fail to pay rent if the government has to pay rent. So those are the major consumers' pension. There's a lot of money going into that. And so I wanted to bring out, the point I wanted to add on to his remark is we cannot separate the finance bill and the budget. I think before 2024, people used to focus a lot on the budget.
Without really understanding what advises or what informs the budget.
The budget, exactly. So now if you bring the two together, so if the government says they want to spend 4.7 trillion Kenya shillings, the question is, how do you finance it? And so they bring the bill to say, as much as we expect to collect X amount, maybe 2 trillion from the existing tax measures, we also want to ramp up and increase that by an additional 100 billion. And so the bill is meant to bring those additional measures, whether administrative or, additional taxes, to increase, because it's good to understand that we can actually survive without a bill.
Yeah.
The only issue is we may not be able to get additional revenue. So the bill is meant to increase the revenue. But within the existing laws, we still should be able to collect revenue, like happened in 2024.
Yeah.
We didn't have a bill after it was thrown out.
That was vacated and then reverted back to the 2023 finance bill.
Yeah, so it's possible to survive without a bill, but because of the growing expenditures, you find the government will want to increase tax revenues on an annual basis, and hence they need to have a bill every other year. Yeah.
All right. So necessarily we do not need the finance bill that much. We could say the previous finance bill we had was very nice. Let us just continue with that. Government collects money through taxes, which are some of course, this is also in benefit for our viewers, which are the pre-existing from way back. Which are the pre-existing taxes that we have known as Kenyans? And I ask this question specifically because now this will also give us a basis to understand which are some of the new taxes that are going to be introduced. The famous one that I know personally is the pay.
Thank you, Albert. Do we talk of direct and indirect?
So probably we could share it. You could talk about the direct and he talks about the indirect.
That's okay.
Yeah.
So basically we are talking, as you have said,
Yes.
we talk of the employment tax. Now, that's what hits everyone. And that,
Remember, there is a huge unemployment bulge. Eh?
yes. So the pay as you earn is the commonly known tax that hits everyone in a formal employment.
Yes.
And then now, and that is tax on individuals in the name of employees.
Yeah.
The other one is what we call withholding tax. And withholding tax is also on two categories.
All right.
From an individual perspective, maybe like Martin here is engaged as a consultant.
Yeah.
So amount payable to me above 24,000 will be subject to withholding tax of 5%.
5%, all right.
There's a contractor somewhere from Jengo and is really qualified and can be engaged as a contractor.
Yeah.
So the amount paid to him as an individual will also be subjected to a withholding tax of 3% because of him being a contractor.
Yeah.
But
So
then
there is a difference between the tax on a contractor and a consultant.
Yes.
All right.
And maybe someone also who will be engaged like a trainer to train in a kind of
Or
class.
workshop or
Exactly.
something, yeah.
So that person who is that qualified and is paid amount above 24,000 will also be considered to be subject to withholding tax, 5%.
Yeah.
Now, from a company perspective, if a company or a firm offers consultancy services, the amount payable to that firm or the company, depending on what it has offered, but it's under management, professional services, and that will also be subjected to 5%.
Like some of the firms that you gentlemen work with.
Yes. And also now, even as a contractor, a company engaged now to construct such will also be subjected to 3%. So there is who is being taxed.
Yes.
Is it the natural person, the individual, or is it a body corporate? Or incorporated body? Then the other tax is like value-added tax. Value-added tax is on a day-to-day consumables. Both
The
goods,
sugar, the eggs,
both
the
goods
milk.
and both goods and services. But we have some of those products that are maybe what you may call more of households, and that is why you remember there were chaos when you tend to increase tax, and this is now value-added tax on goods that are more at the household levels.
The bread in 2024.
Yes. So that needs to be looked into. So when we talk of they need to be zero rated, it's because there is the process of bringing it to a consumable status. So that input, the production costs, the power, the rent, the machineries, and any other that is a direct cost towards the production has a VAT element. So then if you charge VAT on that product,
double taxation.
it increases the product. Not double taxation. It
But
increases
the price of that particular
exactly.
product.
And so the people who have been taxed or the consumers will feel a bit of a strain. So there is the VAT, which then have different categories. There is the normal standard rate, which is 16%. We have had a series of back and forth over the fuel, which is now at 8%. But initially, before now, the crisis we have had because of the war around. Then we have exempt and zero. There's a difference between exempt and zero. But what are we talking about? VAT as an income to the government. Then we talk about the corporation tax. Now, corporation tax is more of tax on profits. You may be in business, but you are not making profits. After putting into account all the allowable, deductible expenses. There are those
Being
expenses.
called auto population in the systems these days.
Yes.
Yeah.
So if you are doing it as an individual consultant, you had asked earlier
behind the camera.
behind the camera about you being accounting to the last coin.
Yeah.
It's because there are some expenses that, especially at the personal level, it's neither here or there.
Yeah.
As far as business is concerned. If it's your firm or a company, then you need to have allowable expenses. So after putting that into account, then the balance of that, it is taxed at the prevailing rates.
Yeah.
So that is what basically is more and commonly outside there.
Yeah.
The various taxes.
Yeah.
The rest may be indirect taxes
Yes.
in form of the fees.
Yeah, he's going to speak about them, but let us get a working scenario.
Yes.
I'm a consultant.
Yes.
I am paid 100,000 Kenyan shillings.
Yeah.
The person who is paying me money withholds 5% of that, which
Yes.
is 5,000 Kenyan shillings.
Yes.
I am left with 95,000 Kenyan shillings.
Yes.
On that 95,000, I'm going to account in for transportation, whatever amount I will account in for that. I'm going to account in for my living expenses. Probably have an office or something. And say all of this amounts to 60 or 65,000 thereabout. So I am left with 30,000 thereabout.
Yes.
So on I think it's on 30th April, that is when that tax is supposed to be remitted back to KRA. I am supposed to remit a percentage of that will be considered as profit of the 30,000. 30,000 will be considered by KRA as my profit. And that is what I'm supposed to pay tax on.
The balance of tax.
Yes.
I think there's a lot that people, the citizen, need to understand
Yes.
when it comes to matters tax.
Yeah.
As an individual consultant,
Yes.
you are still within the accounting year. You are within the calendar year
Yeah.
of January to December,
Yes.
which is different from a financial year of a company.
Which they can decide how they do their business.
Depending on when you are registered. You have heard Robert here say
Yes.
that many of the changes that are proposed in the bill take effect
To January.
July.
Or July, some to January.
Yes.
Yes.
Reason being, the financial year of the government starts
in
July, ends in June.
Yes.
So the government has to make sure that as it starts its new financial year, the proposals are effected. That's the reasoning behind.
Yeah.
But now for an individual, your calendar year, whether you have income or not, you are living. So maybe that's the rationale behind it.
Yeah.
So, and majority of the individuals who are now in the employment,
Yeah.
so they are paid January to December. And the year tax is at source.
Yeah.
And that is why even the KRA is, I believe this is administrative,
Yeah.
by saying that new returns or employment filing of the P9As
Yeah.
need to be done immediately by January, because all this has been submitted in the course of the year,
Yeah.
January to December. So by 10th of January,
You should have.
the tax of December has been submitted, and so you have, unless you have any other income
Yeah.
that you need to declare on your PIN,
Yeah.
then the period within which you need to file your returns. But now, when you're in business,
Yes.
also,
Yeah.
as an individual, you also need now to have accounted for cumulatively what did you earn in the course of the year.
Yeah.
And living expenses are not business expenses. So it's a gray area.
I thought I was about to give my landlord's receipt as an expense.
Unless you have a portion of your house dedicated
Leased
as
out
an office.
We are working from home these days.
You need to have a proof. You need to have a conversation around that.
Yeah.
But it's that direct expense that was exclusively incurred in the generation, like coming here.
Yeah.
or printing or communication or internet used during that. But and maybe some meals, traveling, subsistence. Those are direct costs towards generation
of that particular
of
money.
that income.
Yeah.
So cumulatively, then you need to aggregate, then see what was allowable expenses, and then what was the accumulated. Then by 30th of April, you ought to have done that and you filed your final tax. Yes. The balance of
So
tax.
basically, I am not getting taxed on 30,000. I might be taxed on a little bit more than that.
Yes, because it's cumulative over the difference
Allowable.
invoices or the fee notes.
Yeah.
And for this time round, we need to emphasize the issue of e-teams validated. Yes, I think that will we are in a journey to ensure that income validation, it's easy because me, I want to be paid. And maybe I'm more of the times is that I'm dealing with a body corporate. So I will easily issue the e-teams invoice on my PIN. The challenge we have is on the expenses. Maybe I hired a taxi who have not, I have paid. So those are the challenges that we are facing.
Those are the gray areas that we need to dispense out.
Yes, and the good thing is I don't know how this was. Well, it's ISPAC who brought us together. We are both in the tax and committee of ISPAC, and we have had conversation with the commission. And I'm happy that even as we look forward to 30th June, which is the deadline of filing the returns, we have been promised of the relaxation of those strict adherence to the e-teams valid expenses, so that then people can be able to file. And Kenyans are Kenyans. The uptake of compliance is not like a waterfall, so it takes time. And even that's why there is also so much of the resistance around any proposals, whether good or bad, before they synthesize what it means and how it resonates with the business, how it affects the day-to-day running of the businesses in the generation of the income. So the question. So as said, yes, 30th of April is when you're supposed to pay the balance of tax. If
you generated more income.
And if your financial year is January to December. Yes.
All right. Robert.
Yes.
He had a long spell. Let us bring you now in on the indirect taxes. Some of the indirect taxes.
Yes. So the first one is what he highlighted, the value-added tax.
Yes.
It's the most common and the most known tax in any economy.
You don't get to feel it.
You don't feel it. Absolutely.
Yeah.
So when the government says about just 4 million Kenyans are paying taxes, they should be just clear. These are direct taxes.
They should be honest. All 56 million Kenyans are paying taxes.
Absolutely. In one way or the other, as long as you consume goods, you're paying taxes in one way or the other. So VAT is, and you also say it's the most regressive in the sense that if your salary is X amount, let's say someone earning 1 million and someone earning 30,000, if they buy the same good, they pay the same VAT, regardless of their income.
Where you buy it from.
Yes, and their income level. So
because somebody at $1 million buys things at a different place than somebody who I would buy at, with a salary of 30K.
Exactly, and the pain to the one earning 1 million and the one earning 30 is
negligible.
So so it's regressive in that sense. So that's why you find that, like he said, we avoid having VAT on basic commodities in the sense that you want to ensure that the commodities that are being consumed by every Kenyan are not impacted by VAT. So VAT, the biggest one, we've had it for many years. So that has been there for many, many years. The only thing that happens on an annual basis is an attempt by government to move goods or services from one category to the
other.
Yeah. So the standard category is 16%. And we say Kenya has one of the lowest in East Africa. That's what they say, at 16%. But the other classes would be, like you said, zero-rated. Zero-rated means
that product is not taxed at all.
Taxed at 0%. And exempt, exempt goods which are also not taxed. The implication is different, but more or less there's no tax, whether it's related or exempt. The implications are different behind the scenes. The other one that hasn't been there for many years, but has maybe 10 or so years, it's getting traction, is excess duty.
Exercise duty.
Yes.
Yeah.
So that mainly, historically, it was taxed on those people who consume what they call maybe beer, cigarettes.
Luxury, we would say luxury goods.
Luxury goods,
Yeah,
exactly.
cigars and stuff.
Absolutely.
Yeah.
So that was the main focus. So historically, I remember you used to wait until you'd get to hear the price of beer, the price of nini has gone up.
Yeah.
So those taxes have been there. But now, what the government has done in the recent past, and that's why you are talking of the execution on mobile phones, is that they have expanded. So they are no longer just focusing on those luxurious goods.
Yeah.
So they have gone more and focused on more goods that are not necessarily luxury.
Yeah.
Even water, juices, things that are not necessarily luxury. So it is there, but we have seen now the government focus a lot, because what I would say is excess duty, people are not so familiar with the excess duty. So if you go for VAT, people cry very much.
Also, basically, the government are just trying to wiggle themselves.
Absolutely. So that appears to be the strategy they have adopted of getting the additional revenue people have been avoiding.
So they know
Yeah.
the public is so much fixated about this VAT.
Yes.
So let us use this loophole
Yes.
that they're not so conversant with.
Yes, yes. So,
All right.
So those are the main directors. I mean, the rest is what you'd pay at the point of importation, mainly the customs taxes, because if you're importing a motor vehicle, equipment, anything you're importing, there will be those duties that are payable there.
Yeah.
But those will impact you if
Only
you
if
import.
when you are buying.
Yes.
There are the road maintenance, fuel levies. Where do those ones fall? Because they have also caused a very steep. And actually, these are some of the biggest factors of production, because the moment that levy is high in terms of fuel, then me, who is a manufacturer, my cost of productions are going to go high, and I will have to impact the person who's buying my final product.
Yes, that's a levy for sure.
Yeah.
You know, the
Or
government.
is even a levy a tax?
No, that's the thing. The government would want, you see, there's what we call appropriation in aid, which has government fees, levies, and all that. So there are some levies that are considered to be part of taxes, and they will be considered when they're determining the total taxes.
Yeah.
And there's some levies that they will exclude, and they will just call them appropriations in aid, meaning it's government charging for a service. But like the one you said, road maintenance levy, we have had hot debates on that item. Reason being, it's charged on fuel. So if you're buying fuel, there will be VAT on that fuel. You have paid VAT. You'll also have paid excess duty. You'll have paid road maintenance levy, and quite a number of other levies that are part of that. So now, the only difference between a levy and a general tax is that a levy is meant to do a specific thing. So road maintenance levy,
It will
goes
go to that.
directly. Exactly. Taxes are commingled and they are used for all government purposes. So that road maintenance levy, the one thing that we've had is that there's an increase from 18 shillings to 25 shillings. Part of the reason was that, you remember the issue of pending bills. We had a lot of contractors who actually vacated the roads they were constructing. So the government negotiated an increase of the 7 shillings to be able to get some financing.
Additional money.
To be able to pay off these bills. And that's how you've seen contractors getting back on the roads. So we have committed. There's what they are calling, I think you've had parliamentarians get to that. We have committed. We have to. Whatever come may, the 7 shillings is committed. Because we have taken a loan to pay off the historical debts. So that's why you see the levies coming in. And because of the commitments we have, the government may not do much in terms of doing away with them.
I want us to go for our first break. But before we go for that break, this might not be in your fold, but I know you're taxman, so you understand it. The demographic that we serve, there is something called tax exemption for persons with disabilities. From your purview, and a person with a disability who is watching right now, and they do not understand how does that work. From your profession, how would you see that play out? And I ask this very specifically because there is tax exemption, of course, on the payee. But now I I'm a professional besides my day job. I offer consultancy services.
Yeah.
How does my tax exemption then also come to play into that income that I have generated?
Okay. Food for that.
Serious question, eh?
Yes.
All right.
Yeah.
I see your stand. You could think about it. We are talking about, we were meant to talk about the budget 2026, 2027, but we rather decided to get this conversation at the very beginning of understanding what are taxes. And in the first half of this conversation, we spoke about the different taxes, the direct taxes and the indirect taxes. And helping us have those conversations are Mr. Martin Waweru, CPA Martin Waweru, and CPA Robert Maina, and they are all chartered accountants with accountants, with ESPAC. Gentlemen, before now we go into the finance bill and its proposals, let us have the final question that we had asked before we went for the break. For persons with disabilities, of course, there is that threshold that was brought in by the Constitution of tax exemption, of course, to a particular amount. How could then persons with disabilities benefit using that tax break? Because, of course, we know some of the challenges, the limitations, and expenses come with being a person with a disability. From your accounting experience, how would you see and look at persons with disabilities using that to benefit them or to be able to be within that tax bracket that the government is trying to bring everybody into?
Well, before Robert comes in, it's more of it's a relief.
Yes.
It's a relief, and you need to get certificate from the organization.
Yes.
So that then it justifies why you need to access the relief, and especially at the employment level.
Yeah.
So that amount now, that certificate gives you the relief exemption access. But then exemption still, that's from employment.
Yes.
And from a perspective of individual.
Yes.
We also have income tax exemption from a company or a body corporate. So I believe it's 150,000.
So yeah,
the exemption
on individual on salaries.
on salaries.
Yeah.
But then we have said that the SPDK,
UDPK,
PDSK organization, that need to give you that certificate with the category of what
the tax that you also the tax bracket.
The certificate is to give you as a
ideally it should be a
the
classification.
member.
You see the disability one is suffering from.
Yes,
they should
yes,
be
yes.
able to classify
The visual,
and verify.
So that the organization that coordinates, if I may use the word, is what will give you that certificate. So that upon presentation to the employer, then they will not subject your salary to pay as you earn. So that's the basic. And that is to the individuals. Now, how about a person with disability working as a consultant? We also need to know how do they work? Do they work as sole proprietors? Do they work as in a partnership? Or do they have a body corporate, like a limited company? Still, yes, if they work in a company, sort of, or a firm, and they're entitled to a salary, then he still produces that certificate to warrant them that relief.
So what you're saying before Robert comes in, if I'm a person with a disability and I have a company, a company is not a company with a disability. That is a totally different entity.
Yes.
So just because I'm a proprietor of that business does not mean that now the benefits or the reliefs that I enjoy, my business too will enjoy.
No, you are enjoying as an individual.
So when that business makes income and that income is paid to me, that is when now this is affected.
Exactly. And so we were talking about individual, the natural persons. So you need to have that certificate. So for the institutions or for the companies, we have the income tax exemption rules and 105 of 2024.
Yeah.
So which brought about terms and conditions. So sometimes back we could have what you may call blanket exemptions, but now we have tightened. There are some rules that has brought that tightening of the exemptions.
Yeah.
So you have to qualify as a company, but now these rules applies specifically to body corporates, which are a number of them.
Yeah.
So, but for this case, we mentioned about the individuals, the natural persons.
Yeah.
Yes.
Just to add on to that, there is the Act of Parliament that was sponsored by Honorable Christo Asige.
Yes.
The person
The Persons with Disabilities Act.
Absolutely.
Yeah.
So when you go through that Act of Parliament, there are a couple of exemptions that people should enjoy. So, for instance, if you bought equipment because of your disability, maybe you need some support and you had to import goods and all that. That Act of Parliament provide that you should be eligible to claim those expenses as normal, because you require them to be able to do your work. So going through that Act of Parliament, I know that hasn't been transposed into the Income Tax Act, but I think the Income Tax Act also says any exemption provided in any other Act of Parliament, you are entitled to. So it will be upon someone with disabilities to provide proof that you incurred X amount, you have the invoices, you have that, and all this. Maybe you even had to modify the office to make sure that it's suitable for the work that you're doing, and maybe for people to access it. So those kind of expenses you would also be allowed to deduct to the extent that you have the support that you have actually incurred them and they were meant to facilitate those people someone to work. Yeah.
All right. Now I don't want to say the more serious stuff, but now to the conversation that we're supposed to have this morning, the budget 2026, 2027, the proposals. Let us start with the proposals. What do you gentlemen make of the proposals as they stand currently? And what are the proposals actually? Everybody is smiling.
I mean,
You're like, these guys don't know what's coming.
The proposals are many. Proposals are many, and I can tell you that we are ready. We are ready for the provisions. Are like 18.
Yes, 18 of them.
18 of them. And they are covering across.
Yeah.
So it's now upon the key stakeholders to say this is affecting our sector.
Yeah.
And as such, they'll give out their views, which may be considered. And I remember when we were taking the views from at the Treasury, we were part of that public participation. And one of the proposals that came through from the guys of Central Bank, so it was considered. So it all depends with who is it affecting. Vis-a-vis also the political goodwill. Because as Robert here said, yes, we may do without the bill every year. So if we have a framework that can run 1 year, 2 years, and these are the policies we are talking about. So it depends with what has been mentioned. So there are proposals that will affect the income tax. And so we will be looking at, besides the individuals who will experience, the CS Treasury had given so much hope to the employees, which then went silent. So the employees may not really now, they will be now touched through the day-to-day consumption of the goods and services from which they buy now from the companies. So the registered businesses. And those registered businesses will be from SMEs to the multinationals, to the companies that are global presence. And so each and every element of proposal will be now relevant to the different setups. Maina, so one of the things is about royalties. I don't know whether we are getting more complex.
Maybe I can touch on some of the basic ones. I know people have talked of, we had the one on Mutumba.
Yes, Mutumba.
So there was
and the government saying ni watu wa Mutumba wali advise wafanywe hivyo.
Absolutely.
Yes.
So that was in the first version. Now, it appears the government released the first version of the bill before issuing the Form 1. But in any case, the Bwana CS body has said they will really introduce. So I think it's all the discussion.
Yeah.
So what the government is attempting to do, you see that like the case we were saying, if you're a consultant and you're deducted 5%, you still have to factor in expenses and all that.
Yeah.
What the government is attempting to do in that case is saying, if you're dealing with second-hand clothes, once you pay that tax, you're off the hook. You don't need to think about any further tax, any other expense. So if you pay, so let's say you import goods worth 100,000 at the port of Mombasa.
Yeah.
That's the customs value.
Yeah.
You'd be required to account taxes at that, so account taxes at that level. So if it's assuming 100,000, you say 5% of that is what would be deemed to be a profit.
Yeah.
So 5% of 100,000, which is 5,000. Now, 30% of that is what would be the tax payable. So it's effectively you'd be paying tax at 1.5%. Now, the good and the bad, and I think maybe the people in that sector should also discuss with the government the pros and the merits.
Yeah.
Because once you pay that tax, they will not be harassed anymore by KRA. In a sense that, because currently, KRA can come to you as a retailer and they will ask you for a record of all the probably M-Pesa payments you have received from the tuber sales and all that. And then if you don't have the supporting expenses, they will tax that wholly. So the pros and cons, I think it's worth a debate because what we are saying, remember what we are saying, that people in the informal sector do not pay as much taxes. Now the balance is, how can they be taxed without making the burden too much in terms of how to comply? So it's a debate out there. The pros and cons, I think it's open there. And I think the CS has said it was a proposal. We don't know if that's correct, but they have said it was a proposal made by the players in that sector. The other one you said is on phones.
Yeah. And I don't understand that part that that tax will only be effected once I switch my phone, once I register the phone. How does that work?
My thinking behind that is you've had the government say in many instances that there are a lot of phones that are imported in this country and no taxes are paid. You know, the way they are imported as consolidated cargo. Yeah. So when
they had removed the aspect of consolidated cargo and they were viewing everything per product.
Yes, that has been said, but I don't think in practice it's actually they have
been able to really
absolutely. I think our airport in Eldoret handles a lot of that, and some of the things are not cleared properly. So that's my thinking is what the government is trying to ensure, that for you to actually use a phone, then there will be evidence that you pay tax, because it cannot be activated
until that tax is paid on it.
Absolutely. So I think my thinking is that is what they are trying to target. Now, in terms of the impact of the changes, if actually what they are attempting to do goes through, the cost might go lower, slightly lower, by the way, because
of the phone itself.
What they are doing is that they are doing away with VAT on the phones. They are doing away with the levies. We have railway development levy, import declaration fee, excess duty. So based on a simple simulation that I did the other day, because currently if you import a phone, what would happen is at the port of Mombasa, you'd pay first of all import duty at the rate of, let's say, assume 25%. Then on top of the import duty, there'll be excess duty, currently at the rate of 10%. Then on top of excess duty, there'll be VAT. 16% now, plus the other levies that are there. Now,
the CS capped it at 55%.
That was his approximate of the levies.
Tax over tax.
So the savings are not as materially, they are probably not as big as the CS wants to point out, but I think there might be a slight savings if they actually go the route of excess duty at 25%. And potentially their thinking is, if they actually capture all the funds, that will compensate the duties they are getting, because currently I'm sure only genuine traders who are importing the proper way are paying taxes. So if they are now getting taxes from every phone in this country. I think the
because there is a
collection
lot of
will-
business in the ex-UK and ex-US,
Absolutely.
Akina Dubai phones.
yes.
Some of us cannot afford iPhones, and that is the only way we get
Yeah, so
we
that's
get access to those phones.
those ones. So I think that's how they are trying to see that this would compensate the reduction in the duties.
Yeah.
So that would be the one. The other one is the other common one is for people. Which other? There are a couple of administrative measures, I would say.
Yeah.
Administrative in the sense that the government is saying if you are dealing with bitcoins,
Yeah.
they want your data given to them.
Forex trading.
Forex trading. So they want that data given to KRA so that they're able to determine. We have seen people flaunting that they're making a lot of money from these things. So they determine how much have you made. So with that data, they'll now come to you. We see that you made X amount from this platform.
Yeah.
Can you then, and we see you filed a nail return. How can you then explain? So I think they are going for administrative measures in terms of they want to gather data to try to come to taxpayers. There are a couple of others, but I think I'm just looking at the main ones that would affect most of the people. But maybe you could have a bit more.
Yes.
As you come in also, there is one that I think many people are not talking about, but it is going to impact them. The taxes that if you earn rental income in the country, you pay taxes, yeah? That, I think it's going to be moved from 7% to about 10%, if I'm not getting the figures wrong.
Yeah.
And definitely, as we know, if you are an entrepreneur, if your taxes go up or your expenses go up, you are going to offset those expenses to the person who's buying and paying for your product. So how is that going to play out as you adding on what Robert here said?
No, there were rumors. There were rumors as the CS. I heard him talk over the radio that people are saying we're increasing monthly rental income tax from 7.5 to 10%.
Yeah.
He said it is 7.5, still at 7.5%.
Yeah.
But remember, the housing levy is 1.5. So still, anyone who pays MRI must also contribute towards the housing at 1.5. So
before I lose you, what is MRI?
Monthly rental income.
Oh,
so
all right, yes.
And we are talking of majorly the residential property owners, the landlords, who are at a maximum, who within the year do not exceed 15 million. So the year collection on monthly basis is taxed on gross collections at 7.5.
So
which is final tax.
Yes, a working scenario here.
Yes.
Again. I have my units somewhere in this country.
Yes.
20 units,
Yes.
Each unit is 10,000.
Yes.
That is 200,000 at the end of the month.
Yes.
So I pay MRI on that 200,000.
7.5%.
7.5
Yes.
at the end of the month.
Yes.
Not at the end of the year.
By 20th
Of the following month.
of the following
Every
month.
month. So it's a monthly filing obligation.
Yes.
Yeah. So then let us track back in the
Yes.
conversation.
Yes.
So if my landlord pays MRI, there is data to show that I'm a tenant in that block.
Details of tenants?
Not necessarily.
No.
Not necessarily.
Not
They declare on a
necessarily.
gross basis.
Yes.
The sum total.
Yes.
Because now I was trying to find ways how I justify my consultant, my consultancy money and where it went.
What they have brought on board is what we are calling the non-resident. Non-resident landlords.
Yeah, those who have units within the country, but they are not Kenyans.
Yes.
Yeah.
So depending, some of them could have done it through investment. They could be owning commercials.
Yeah.
So it depends with how they own it. So if it is within the MRI, then they need to register as they would need to have an appointed tax agent, then register for these obligations and such.
Yeah.
So we are yet to see the implementation of that. And maybe what is also not coming out clearly is on some of the withholding tax proposals that have been brought to. That is touching even to the scrap metals dealers.
So a scrap anataxiwa.
They are saying, the government is saying they are multi-millionaires. Yeah? They are saying
So at 1.5% gross amount.
Yeah.
So so scrap metal dealers has been added to the withholding tax.
Which are some of the new entrants now that you speak about? Because now it seems like there are others, but hatujajua.
So you see, we are talking of expanding the tax base.
Yeah.
And the tax expansion has always been deemed to the white collar space.
Yeah.
Those going to the offices.
Yeah.
But people leave offices to go and say, "Imeenda jua kali." But that's jua kali is where then they are making
Huge amounts of money.
yes.
That the government does not get a fair
Yes.
share of.
So money is in the dirt,
Yeah.
as they may say.
Yeah.
So the government is trying, and now I think it's in the wisdom of that arm
Yeah.
that our commissioner has been in the system and is very much privy
Oversight.
to
Yeah.
with who does what and who is it really into the SME space.
Yeah.
And so those Juakali people, those scrap metal people, so they are also kind of now it's now looking forward to how do you formalize the so-called Juakali space?
Yeah.
Because how many scrap metals do you know about, and how are they organized, and whom do they sell to?
Yeah.
So they sell to big melting companies that do manufacture of steel, and those companies they that melt these raw materials would also import. So they would be capturing the importation. But how much do they pay to these
People who are just collecting from.
Yes, and I tend to think about how we are also looking at the end producer responsibility of in the recycling space.
Yeah.
So that is one of the space that we have not touched, is not yet being spoken about the withholding tax on the scrap metal dealers. There is also the withholding tax on this issue of the royalties and the money paid on the platforms. The money transfer, the interchange. And
The royalties you're talking about, I see a lot of people shouting on TikTok in the night, and they're given lions. Lions are worth how much money and all of that. Are these the royalties that you're talking about?
royalties are rights.
Yeah, they'll be different. Those ones will be what we call digital content creators. They are
Those will be
already
taxed within. I think there is already a tax for
There's a
that.
tax for them.
Yeah.
That is already there. So the royalties we are talking about is for payment service providers. Usually banks, when you transfer money from one platform to the next one, is the fee you pay.
Yeah.
So what the government is doing is that they're imposing a fee for banks who are procuring this service. MasterCard, the MasterCard, the visas and all that. Right? So there's a fee they'll be required to pay. It may not affect you directly as a citizen.
But it will affect me because the cost of sending money around will definitely
They
go
might,
high.
they might push you. If they don't agree to absorb, that's how you find your fee has been adjusted by 5 shillings and all that. So that's how they indirectly they come back to you. But there's that attempt to do that. Scrap metal, what they are trying to do, and he has explained very well, is to make sure that those people who are now buying the smelters, they withhold 1.5%. So that they now,
if I bring you metal worth a million bob, you pay me less 1.5 of that a million bob.
Yeah, you see now they have managed to correct that, and they have visibility of how much money is flowing through the economy.
Yeah.
So I think it's an attempt again. It was actually there in 2024. It was repealed last year. They now want to
reintroduce it.
It's a case of we have also had one issue we have with this government is policy inconsistency. One day you want to do this, the following year you appear to do away with it, then the following year you want to reintroduce it. It becomes a bit of a tricky one for businesses when they are planning. It's an issue we have highlighted even as an institute. That we need a bit of predictability. If you decide to do with this, maybe stick for 5 years and say for the next 5 years, this will be the level. So after
This is
that,
the finance bill that we're going to work with for the entirety of 5. We
Yeah.
have put everything in it.
Yes.
We're not going to change anything.
Yes.
Let's run with it for 5
For
years.
5 years, and then we have another review. So that is a major problem in this country. That's why you see people are quite cautious of what's being introduced. Yet the government can actually make things that can, be used for a couple of years.
Yeah.
So maybe to wrap up on that, as far as the SMEs are concerned, is and the freelancers, is for them now to know that any digital space, the market space, the platforms that would, upon onboarding, you will earn a living. Being paid 5% withholding has to be withheld. The others that would be touching on multinationals is the country by country reporting, which those are at high level. Yes. So and those are the basic, the main highlights of the income tax part. The rest would be maybe on the VAT.
Yeah, so VAT, what they are doing is, there's what in this country we call tax expenditure. Tax expenditure is when the government decides, in a way, they want to pay VAT for you. When something is related, in essence, the government is offering to pay that VAT on behalf of that person who is consuming. So what we are seeing, the government is doing is to do away with that. They're saying, we are tired, we have financed you so much on this idea. So they are now moving those goods from zero-rated to exempt. Exempt means they can no longer make a refund claim to government. Because if they are zero-rated, what they do is that all the input, all the VAT you incurred on your expenses, your purchases, you actually, if something is zero-rated, let's say electric buses, currently they are zero-rated. You see all the VAT they have incurred to purchase, everything that has been used to construct it, they would claim from the government. Because the government has decided to bear that cost. Now what they are doing is that they are moving that item from zero-rated to exempt. Once it goes to exempt, they can no longer claim a refund from government. What they do is that all the VAT they have incurred, they have now to increase the cost of that item and push it down to the final consumer. So that there are a couple of things
really happen.
They do, but we have to say they do, but is on a priority kind of quote-unquote basis. But still, there are still some pain points in the refund process. Because, people crucify KRI, but KRI depends with treasury allocation. So it's not about KRI. KRI is just but an agent to enforce collection. Otherwise, money is with treasury. They're the ones who say, we feel like this is too much, so we're not for it. Move it. So the buck stops with treasury when the refunds are to be given out. Yes.
All right. I want us to take another break. When we come back, we're going to be coming back with the last leg of this conversation. I don't know if you gentlemen could lend yourselves to speak about the repercussions of these taxations and how would Kenyans, how can an everyday Kenyan live with this ever-changing taxation base, because apparently hatuwezi hama hapa Kenya yetu lazima tujenge nchi yetu. So in that line, how are we going to build our Kenya? And of course, the other thing that I would want you gentlemen to lend yourselves to, the amount of money that government pays in debt, that because they say yes, we are collecting all of this because we have a lot of debts that we have to pay. What is that disparity, and are we really sinking? As the government is also creating that dire situation that things are bad. But in studio this morning, I am joined by two gentlemen who are CPA, and one is a CPA Martin Waweru, and another one is a CPA Robert Maina. They are all chartered accounts with SPAC. Accountants, chartered accountants, not accounts, chartered accountants. Certified, not chartered. All right. Certified public accountants with SPAC. And we are talking about matters taxes this morning. In the first half, we spoke about what taxes are, both indirect taxes and direct taxes. You can go back to our socials and you'll be able to watch that conversation. In the second half, we've spoken about a bit about tax exemptions for persons with disabilities, how you could benefit from that if you own a company or if you are an employee. And we also got to speak about some of the suggestions that are in the 2026, 2027 finance bill. And in this last leg of this conversation, gentlemen, would you lend yourselves to speak about what the government is saying that they need to collect more because of the deficits that we find ourselves in? And our budget has been growing. I think this one sits at around 4.7 trillion. And of course, we have not had yet the collections that have collected in 2025 and 2026. We are yet to know that. But these deficits, where are these deficits really coming from? Is it misplaced priorities, or is it a lot of development that Kenyans are receiving in the long run? And that's not a pun.
Deficit in the government. We also experience deficits in our own
organizations.
Yeah. But maybe the question would be, how significant is the deficit? And that is why then after 6 months, then we have a review to do what we call supplementary. So
basically a supplementary budget is to supplement that which was fell short.
Not really, but also to kind of reallocate and do the budget reallocation.
Yeah.
Because this was deemed to take to be consumed that time. It didn't, and we also do that in our various organizations. So the question is, how significant? So and you see the budget, as Maina said, is also being proposed to be financed through the bill. So what if some of these proposals didn't go through? So definitely the deficit will arise. And so the different ways and means of looking at how do we bridge the deficit. Will it then from the development partners coming on board? Will it, what we are now seeing into divestiture, a selling of some of those
assets that the government owns?
Yes. So deficits will always be there. The question is, how significant
are the deficits?
Are they? And then how do we bridge? So the question, and I remember one time traveling to Rwanda, and the gentleman seated next to me was a World Bank guy. And so a conversation started. So Rwanda is one of the governments that have implemented the SIGO system, whereby you can't pay if there is no allocation. And if that is what we were, and definitely it was resisted, and it has always been resisted. And I believe the day we will get to that point, even working with governments and the private sector will be an encouraging thing. We'll be looking forward to that.
So basically what you're saying, and this is not to dwell so much on Rwanda, this is a system that Rwanda is using.
Yes.
If you're going to build a road, I am a contractor. I'm going to receive a contract from government to build a road. If that money does not exist, that road is not going to be built.
Precisely. And so across
so
all
basically do not spend what you don't have.
Precisely. Yes. And that's what we look forward to. Because even from the private sector perspective, you can't just be up the end. You must start from somewhere. You must see, even, for example, we talk about debts. How soon are these debts coming to finance our operations, the working capital? So if you don't have working capital plan management, kind of, then you'll be going to drains. So we look forward that at the point at which the government will not just be doing budget for the sake of budget. It is chaotic. And these are the things on the ground.
Yeah.
And I had said off the camera that we were in this, the notice that came on ETIM's income and expenses validation that was put into the public in October, November?
Last year.
Yes. Well, ETIM's has been there, but how was the offtake by those who are in business?
Yeah.
Now, you have traded all through January, and then October you are being reminded, November you are being reminded. By the way, you ought to have captured this through ETIM's. You create crisis.
Yeah.
What will you do in 2 months' time to change what you have done over the last 10 months? Now, we are talking about those restrictions over ETIM's income and expense validation. Now, you are also proposing to change the statutory period of when you're supposed to file the returns.
Yeah.
From 4 months, from 6 months to 4 months. You know, Robert and I are in different levels of the farms we serve. I can tell you, you will find someone coming, rushing on 25th, 1 week to the 30th June, saying, I want an audit done.
Yeah.
That's crisis. So even as we do the proposals of the bills, we look forward that we will be having some level of stability, that predictability that Robert is seeing here.
Yeah.
We need that because we are the ones who are in touch. So that's a proposal.
Yeah.
That we look forward that stability needs to be seen in the way the government brings about, whether administrative or through the acts.
Yeah.
We need that stability.
Yeah.
At least you can predict. Predictability, it's not there. And so we are always on the run. This has come. And then the crisis that is posed into certain sectors of the economy and the influence, actually. For example, you remember there was an increase in fees in tourism sector.
Yeah. And
you know that now we have a proposal to charge VAT on in the tourism space to operators.
Yeah.
So, really, how much is the effect, or how big is the tourism space and the players?
Yeah.
And then realizing the changes that will be proposed if they take effect. So we look forward to such stability and predictability.
Yeah.
Yes.
The thing that I'm picking from this conversation all around is that predictability and stability in terms of how much the government is expecting to tax me as a business owner, so that I plan myself prior. Robert,
yes,
anything to add?
You know, and you started with a very good question on deficits. I mean, we are talking of a projection of about 4.7 trillion.
Yeah.
Now, one of the things you will note in this country is that despite these projections coming in, by the time we get to the end of the financial year, we actually surpass them.
Yeah.
Now, this current year, our initial budget was 4.3 trillion. A supplementary budget was issued last month, last month by CS, which pushed it to 4.6 trillion. Now, more likely than not, the same trend, because every year, it's not ideal to have a supplementary budget, by the way. An ideal government should be able to plan ahead, unless there's a crisis.
Last year.
Absolutely, unless it's an emergency or something, and then use that money up to the end of the year. Now, it's more likely than not, by the time we close the upcoming year, we will be at 5 trillion. Now, what does that mean? If you increase your expected spending to 5 trillion, but how much can you squeeze from people? Because that budget has to be financed one way or the other.
Yeah.
So that's how you find the deficit currently is being projected at about 1.1 trillion. But that is still underestimated, in the sense that the tax corrections that are also estimated are, in a way, overestimated. We are not going to correct the math that is estimated. So the deficit keeps on growing. And that's the problem we have in this country, because I think our appetite, because the expectation is the more we spared, or the government spared, we would expect economic growth, which yields more taxes,
Yeah.
which is not the case. Hasn't been the case in this country because there are economic challenges that people are going through. So we really have to manage that because we are paying a lot in terms of interest, about 1.1 trillion on interest, pure. So managing that and balancing, ensuring, yes, people want to have the roads, they want to have the hospitals, they want to have the, all mothers to do the education catered for, but the balance and ensuring that we get value for money. You don't want to see a road that is constructed today, and if you go there 2 years down the line, the potholes are in the majority. Totally. So the value for money, the question is, yes, you paid X amount to a contractor, but are you getting value for money? Or then we have to get more money to, repair and all that. So value for money, so accountability is key.
Yeah.
Because the current expenditure, like we said, is high. We are paying a lot of money that we cannot avoid because there are salaries and all that. But there are things we can do better as a government, and I think that's where we have been failing, and we need to do better to ensure people are getting superb services.
Yeah. I want to give you gentlemen each a minute or two to close this for us. Of course, I'm not going to. You are at a level that I might not ask you to advise me how I live better to survive in these apparent hard financial times. But from a Kenyan perspective, what should I do to brace myself for the taxes? Because what we are getting is nobody is being spared. Yeah. Kidogo utasikia pia mama mboga lazima achukue nini huko kwa shamba awache huko 1.5 mali amechukua mboga. What must we be looking out for, and what must we do to make sure that our taxes are in order? Because the penalties are gonna be affected on your PIN, and they will accrue time and time over and over again.
Good question.
Yes.
And we have been in the recent past, about in April, yes, KRA rolled out what they are calling Ushuru Mashinani Initiative to bring on board people who can offtake some of the very basic services that they keep citizens keep on going to every now and then at KRA office. And some of the CPA firms have also been registered. Ushuru Mashinani.
Yeah.
It is an initiative also to bring tax education to the very basic level, the very basic understanding. So you'll be able to access those people at the convenient stations that they will be established.
Yeah.
And you'll be able to ask those questions for you to understand, because KRA, as you have said, is looking forward to target everyone who is quote unquote in business.
Yeah.
Integration of platforms like Paybill, Buy Goods, Tail Numbers, and also county licensing offices, whereby you have a business, you pay county permit. So that permit has to be linked to your PIN. So, but are you aware of your tax obligations?
Yeah.
So, in essence, we look forward that Kenyans will embrace tax education for them to understand that not everything is ends at tax points. So, do we say we don't even want to tax poverty? We don't need to tax poverty. We will, as long as you're in business and you have anything taxable, some amount taxable, do contribute to the. So that is the fair sharing, that's equity across the tax bracket. So we look forward that everyone will embrace tax education at the very level they operate in business.
Yeah.
And we are available as accountants, we are available. We are in that committee.
Yeah.
And so we are privy to the information of what is forthcoming. And because tax is inevitable till death.
Yeah.
So we must embrace the tax education. That's my contribution to this.
All right. Education. Robert.
Yeah. And I think I cannot overemphasize what he has said on education and being empowered, empowering yourself, because as we get empowered and as we want to know what is in the finance bills, it's equally important to know what that means to each of us, depending on what you do. So information and knowledge is power. And in this day and age, one cannot, social media and so many other sources of information that are there, in addition to getting professionals to support. So mine is a nudge that even as we criticize or we challenge the government on the proposals, let's also enlighten ourselves, because like you said, you will be caught as an individual. You'll be penalized as an individual. So consult, discuss, seek support where you can, and then obviously we hold the government into account. Because then if we collect our taxes, then we also need to see equivalent services. So that's the balance, that as individuals, let's take personal responsibility by getting the support, and then we also then become active participants in this economy. Thank you.
All right. Thank you very much for making what was expected to be a very serious conversation to be a very understood conversation, and I believe that our viewers have been able to learn a multitude of things. That has been Mr. CPA Martin Waweru and CPA Robert Maina, and we have been talking about the budget, the finance bill and budget estimates of 2026-2027, and of course there are still conversations that are ongoing. Mr. Waweru here has said that per sector, now you need to start engaging with the Ministry of Finance. Of course, there is public hearings that are supposed to be happening. So if you feel that your sector is affected, you could seek address to or access to the responsible ministry and departments to be able to give your findings. My takeaway also, education. Education is very important. And I joked to the sign language interpreter off camera that now and ever before, you need to have an accountant friend. So that you find yourself, to find yourself in the right books of remitting taxes. And of course, as Robert here said, for us to be able to contribute to the building of our nation, but also we reserve the right to hold the government accountable to what they do with those taxes. I've been your host, Alan Hubbard, and sign language interpreter Gideon Maina. Let us see you tomorrow, and good morning.